Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is June 28 and we're starting from euro-dollar pair. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.0975 on Tuesday afternoon, coinciding with the MACD line in the overbought area, prompted a sell signal that resulted in a price decrease of around 30 pips. Lending data in the Eurozone and speeches from ECB members may maintain demand for euro and continue its upward trend. Good indicators on M3 money supply aggregate and private sector lending volume in the Eurozone may also lead to a new surge in prices. Similarly, hawkish remarks by ECB President Christine Lagarde pointing out potential further aggressive actions on the central bank's balance sheet will also strengthen demand for euro. For long positions, buy euro when the quote reaches 1.0958 and take profit at the price of 1.0995. An upward movement will continue if lending in the Eurozone remains at a normal level, allowing the ECB to raise rates without problems. However, when buying, traders should make sure that the MACD line is above zero, or it rises from it. Euro can also be bought after two consecutive price tests of 1.0935. But the MACD line should be in an oversold area this time, as only by that will the market reverse to 1.0958 and 1.0995. For short positions, sell euro when the quote reaches 1.0935 and take profit at the price of 1.0903. Pressure will return in case of poor statistics from the Eurozone. However, when selling, traders should make sure that the MACD line is below zero or is starting to move down from it. Euro can also be sold after two consecutive price tests of 1.0958. But the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0935 and 1.0903. The next stage of our review is the next major. Sebastian Seliger presents GBP USD. After the GBP USD pair has tested the technical support located at the level of 1.2698, the volatility decreased significantly and the range trading is continued. The bulls keep trying to bounce higher to resume the uptrend. The local low was made a few pips lower at 1.2684 and will act as the intraday technical support. The 50 MA will provide a dynamic resistance for bulls around the level of 1.2766 when the uptrend is resumed. The weak and negative momentum on the H4 timeframe chart support short-term bearish outlook for GBP, but the bulls keep trying to move up. the pullback might evolve into a full-blown correction if the level of 1.2684 is broken. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsapas. Early in the European session, gold is trading around 1915, below the 21 SMA and below 7-8 Muri level. We can see on the 4-hour chart that gold has bounced around 1910, forming a double bottom pattern, which could be seen as a sign of a recovery for the next few days. In case gold consolidates above 1921, in the next few hours, we could expect an advance in gold and the price could reach 1937 and 1951, 200 EMA. On the other hand, if gold fails to break this resistance at 1920, we could expect it to continue its bearish cycle and it could reach the psychological level of 1900. Yesterday, the data from the United States published in the American session were favorable for the USDX and for bonds. As a result, investors stopped buying gold and it fell sharply. Now we expect a recovery in the next few hours and consolidation above 1910. The Eagle indicator is approaching extremely oversold levels, which could be seen as an opportunity to buy in the next few hours only if gold consolidates above 1921. In the chart, we can see that gold broke the symmetrical triangle pattern formed since June 23, which generated a sharp drop in gold. For now, we see another double bottom pattern, which could help gold recover and the metal could reach the signal around 1942. Top of the bearish channel. Our trading plan for the next few hours is to buy gold above 1921, 21 SMA with targets at 1937 and 1942. In case gold falls around the psychological level of 1900, and if it bounces in that area, it could be seen an opportunity to buy. And finally, here's Laurie Bailey with USD GPY pair forecast. The USD GPY pair has barely managed to break above the resistance of 143.80, opening up the next target level at 144.73. Two factors hinder the dollar's growth: divergence with the oscillator on the daily chart, and investors' fear of interventions by the Bank of Japan, which is ready to support the national currency, as was the case on November 10, 2022. The dollar fell by 550 points. The intervention began from the level of 146.40. For now, the price can safely rise to the first target resistance level at 144.73 and even the divergence will not hinder it. However, a reversal may occur at that level. If the divergence of the daily chart is broken, the pair will continue to rise to the nearest embedded line of the ascending price channel, clearly visible on the weekly chart with 147.40 as the target. Intervention is highly likely to occur from that level. If the price falls below 143.20 level, the next targets will be 142.30 and 140.35. On the 4-hour chart, the price is steadily rising within the ascending green channel, and it has consolidated above the resistance level of 143.80. The Marlin oscillator is suppressed, indicating weak growth. For now, we are waiting for the pair to climb towards the 144.73 target. That's all for today. See you online soon. Good luck.